have the welcomed opportunity to actually present Bitcoin to people all the time. People hire our firm to give them direction with their finances. And of course, you could say, well, Jim, I need a number here. Am I going to be okay in 40 years? Owning Bitcoin in some capacity makes sense because that removes that issue. Usually the people asking those questions don't really understand what Bitcoin is and why it's gone up a lot. And as you're well aware, if you're buying Bitcoin and you don't understand it, there's a really high chance of you just getting absolutely wrecked. Like if we think that Bitcoin will go up over a long period of time in real returns, not nominally, but in real, then that has to come to the detriment of other assets, be it your money, bonds, stocks, real estate, gold, collectibles, things like that. If you just ask another question as why does inflation exist? What causes inflation? Something like that. Most people have never stopped to think about even that simple question. Why does inflation exist? And even just someone, again, putting that rock in their shoe where they think, well, I've never stopped to consider. Or again, like even the most basic question of what is money? I never thought about what is money until I stumbled into Bitcoin. And that's someone who works in money. But most people don't think about those things.
Hi, Jim. How are you doing? Everything fine on your end?
Yes, sir. Rob, I'm doing great. Thanks for having me on again. I appreciate it.
Absolutely. Yeah, it was so great last time. And I think we really touched on nice topics of like personal finance and Bitcoin related mostly, and like spending Bitcoin, on like the importance also of being there for your family and stuff like that. At least that's what I remember. I think it's about a year ago already or something like that. Maybe for the few people that don't know anything, that haven't seen our first episode, give us an overview of especially why you're excited about Bitcoin, but also like who are you and what are you doing?
Yeah. So I own a financial planning company here in the States. We work with about 150 families with all things money, from investments and tax planning and retirement and estate planning. And essentially my job is to help people articulate what's important to them in life and then align their resources, their time, their money, their careers and businesses and talents in the most efficient, effective way for that. So that's what we do. And part of that is certainly bringing in Bitcoin, which is obscure for my industry or profession. There's a handful of us who actually understand and use Bitcoin as a tool with helping our clients. And of that handful, I think I'm friends with all the rest of them. And so it is obscure, but yeah, we use Bitcoin really heavily. A lot of our clients come to us without ever hearing about or really understanding Bitcoin at all. So we have the opportunity to introduce it to them and orange pill them and start them on their way with that journey as well.
Yeah, I think we last time spoke about how hard it is for you and for what you're doing in Bitcoin and in kind of advice, like being a financial advisor, because you get the hardship of the Bitcoiners saying like, oh, like what are you doing, and then also the hardship of the financial advisors saying like, oh, what are you doing with Bitcoin? Did that get better from, especially from the traditional financial space, where maybe with BlackRock now being around longer and more of those traditional people, and also with maybe the Bitcoin treasury companies making more and more rounds, that the TradFi people and the financial advisors kind of waking up to the reality that Bitcoin is a thing?
Ish. I would say I can approach that from a few angles. So one thing I've noticed throughout this year is when I bring up Bitcoin or Bitcoin-centric topics to non-Bitcoiner clients, they're not taken back. So for the last several years, so I've been talking about Bitcoin with clients since about 2020, and trying to bring this up to them historically has been met with confusion or shock or just total lack of connecting. Why would I even bring this up in those conversations? And now when I bring up things like, hey, we need to discuss a possibly an alternative form of money than what we have, and maybe start introduce into the concept that our current monetary system is broken, or the issues with the Fed and centralized monetary control. Over this year, for the first time, that's generally being met with, yeah, that makes sense. Let's talk more about that, versus, you sound like you're crazy. I don't understand where this is coming from. So that's really neat to see. Is people, it seems more normal now for people. I think people are catching on to the state of our monetary situation. Now, amongst professionals, I would have to break those up into a few groups. I have over the last several months started talking with more financial planners who've been reaching out to me to learn more about Bitcoin. Usually it's not understood really, but there's at least some level of, I should look into this. And a lot of times it's usually the same FUD that it's too volatile for our clients. I can't put them into it. The Sharpe ratio, the risk adjusted returns, whatever. I don't see how it's going to fit in. We should just own, a traditional stock bond portfolio. But then I will say that those conversations, I'll just encourage them, and we'll look at the risk adjusted returns. We'll look at Sharpe ratios and pushing back on their notions of what they thought Bitcoin was. And historically, for the last several years, that's been met with a total shutdown. And now it's more of a welcome conversation. That's a good amount of financial planners. There are still a subset of them that they're regurgitating the same old FUD of Bitcoin is tulips and beanie babies. And it's unfortunate. I think that goes back to, ultimately just a personality trait and the willingness to continue to learn and have your mind changed. And if I had to break it up to like different people in the financial profession, there are some people who work in financial advising type companies that are incentivized to sell products. And those types of people, if a Bitcoin product is presented, they will be incentivized, they'll be taught and educated on how to sell that product. And from there, they will begin selling it, which that's not an ideal setup, but at least they're equipping people and getting Bitcoin out there in some capacity. There are other people who are like me, where I don't sell products, who genuinely want to educate their clients and do what's best for them. There's no commissions or anything like that involved, and we're willing to go where we think will best serve their financial situation. And then there's another set of financial planners that are typically, unfortunately, they're a lot like, their setups like mine. I'm what's called a fee-only independent financial planning firm. And there's a lot of these people who have removed themselves from relationships with like broker dealers and commission-based products to allow themselves to theoretically do simply what's best for their clients. The problem with a lot of these people in firms similar to mine is they're already staunchly set in their convictions. And that's usually a mix of market efficiencies, using only like iShares, maybe DFA or Vanguard funds, basically index only. Any type of active management or anything outside of the box of buying a 60-40 portfolio is day trading essentially. So that group will be the hardest, because again, you have group one who is, they're going to be incentivized to sell something. And then group two, based off your personality, like I'd like to think that I'm willing to have my mind changed. I think I'm right. Everyone thinks they're right until you realize you're wrong. Then your mind changes. Then you think you're right again. So people like me in my type of firm who are willing to have their mind change and hear things, I think we'll be the first to adopt, and at least adopt not from a non-sales perspective. But then again, there's the other people who are not willing to have their mind changed yet. They're the tough nuts to crack. I've tried to have a lot of conversations with those people presenting Bitcoin in different ways. I sat in a webinar yesterday it was talking about the current state of the Social Security Trust and how its fundedness level, and the ability to continue paying out Social Security here in the States for certain amounts of time, dependent upon what possible changes are made. If it's increasing the Social Security tax rate, if it's raising the ceiling on what's taxed on Social Security, if it's dropping a cost of living adjustment on Social Security, all these factors. Anyways, I was part of this continuing education thing, and it was just online. And there's a chat forum, and these chat forums are usually crickets because no one really wants to be active talking about Social Security trust fund. But Social Security really frustrates me. I do believe that Social Security is essentially a forced Ponzi scheme by the U.S. government. Like if we look at the definition and the like how a Ponzi scheme functions, it is identical to what Social Security is. So I get in the chat and people are talking about how maybe we should, if you make too much money, you should no longer be available or eligible for Social Security or whatever. People are saying what they want. And I mentioned that maybe we should all just recognize that Social Security is a forced Ponzi scheme upon the U.S. and on citizens. Maybe we should look at how to start phasing it out. And that ruffled some feathers. But then other people started talking about how can we shore up the trust fund? I mentioned, well, gosh, why don't we just print a whole bunch of money and overfund the trust fund? And that's a good way to secure it. And that comment, a lot of people started commenting back about. Some people were saying, yeah, it's actually, why don't we consider that? Ironically, that question got upvoted for the speaker to address specifically. So that means that people are considering, hey, maybe just printing a bunch of money and using that to shore up the Social Security Trust Fund is a good idea. So, yeah, that question, some people thought, yeah, it's a great idea. Other people were commenting back to that saying, well, that could lead to inflation, which I allowed to be a rock in their shoe and said, okay, well, so are you saying that money printing can lead to inflation? It's not just greedy corporations and that cause people to go further and further down there. And so, okay, well, maybe do you think hard money would be a solution? Like, oh yeah, well, gold and silver historically have been good solutions to reducing inflation. Then, well, what do you think it'd be possible to find or create a form of money that has a fixed supply? So anyways, these are the people in that webinar yesterday are the type of people who are the second group of mostly like fee only financial planners who are generally trying to do what's best for the clients and be highly educated in all these fields. But again, a lot of them are already like set really staunchly on what they believe and have biases. And those biases usually that Bitcoin's tulips and beanie babies. But I try to be a thorn in their side and urge them to think. We'll see. That was a really long tangent, but that's what gets me going. It's odd. I have the welcomed opportunity to actually present Bitcoin to people all the time. People hire our firm to give them direction with their finances. So we're in a trusted relationship, and those people, it's pretty simple. And then I'm met with my peers is a total opposite. They're really well studied and have convictions of their own that they're nearly immovable on for the most part. So I live in these fields of like, they come to us very malleable. That's why they hired us. And there's no way you're going to get through, but I'm still patiently trying to help them out. It's less for helping other advisors. It's the fact that like, okay, that advisor works with 150 clients. That frustrates me because I know that if he doesn't understand Bitcoin, he's got 150 clients who are sitting in a 60-40 portfolio. And he thinks that their inflation rate that they can assume for their portfolio is going to be 2.8%. Like if you look at the systems and like resources that most financial planners use, like they have these built-in metrics for assumed rates of return, assumed inflation rates over the next 50 years and so on. And I think most Bitcoiners will look at this and be appalled.
What are you actually expecting for like inflation and for that moving forward? Because this is something where it's super hard for me. Even for Bitcoiners, there's this wide spectrum of people saying like the most extreme say like, oh, like the fiat dollar could be erased next Wednesday. And then there are the people that say like, oh, a fiat dollar, like a fiat money will always be around. So you have like on both spectrums, like the one thing everyone agrees on that fiat currency is the US dollar, the euro, yen, whatever you choose, will always go down. Like I think that's the only conception that like most people and especially all Bitcoiners agree on. But then to the degree of like what inflation rate is always hard, and especially when someone puts out price targets on my podcast, I always have that one comment in there saying like, yeah, great that Bitcoin is going to 1 million, but what will 1 million give me? And it's like, yeah, okay, you have to adjust it for inflation. So like the inflation rate is something that I'm like, how the heck should we know? Like, I have no clue of like how to even approach that, to think about assuming an inflation rate for the next like 2 years, no matter even 50 years.
Yeah, so most financial planning software, so we don't use these because I have strong convictions and opinions otherwise, and can do the math pretty quickly in my head anyways, for the outcomes that it would present. But most financial planners use Monte Carlo simulations, which are basically 1,000 randomized scenarios of what will happen with your money over X amount of time. So Monte Carlo typically would have like, all right, Robin, you have $2 million in these investment accounts. You're 47 years old. You want to retire when you're 63. We're going to, and you think you're going to spend $250,000 per year during retirement. Here's your probability of success of hitting that goal, depending on your savings rates and so on. And these Monte Carlos it'll run 1,000 randomized scenarios of different sequence of returns with your investments. So like, all right, you have whatever I just said, $2.5 million. So that $2.5 million can have a total annualized average return of 9.6%. But the sequence that happens will massively dictate your end of life value. So it has expected returns, but another piece of Monte Carlos is the annualized inflation rate. And that's a big problem with these things, in my opinion, because most of these Monte Carlos have a default inflation rate like way lower than I would be comfortable with. Like some of these defaults are like 2.5, 2.8, maybe 3% annualized inflation, which, of course, if you're going to listen to Uncle Sam about what inflation is, well, yeah, that makes sense. It's between 2 to 3% annualized for CPI. So we should use that as our inflation rate for a personal level. I just don't see that as being sustainable. I haven't seen that inflation rate in my life. Maybe that's because I keep having more kids. So of course our grocery budget's going to go up. I don't think that's it. I think it's actually each avocado costs more than 3% last year. So what will inflation do? I do think that the default assumptions that most financial planners make is way too generous on our ability to not have high inflation. Again, the metric that's used by most planners is going to be CPI, which I would assume as a Bitcoiner, you understand what CPI is made of and how it's manipulated with like, oh, well, you know, we're not going to increase the cost of a car by as much because your car has power windows. So therefore we're going to get a discount on the inflation rate of your vehicle. Things like that. That's massively manipulated. Of course, we can look at monetary inflation. Is monetary inflation the true indicator of asset inflation? So if we're looking at the increase of money expansion, is it closer to 8 to 10%? I would lean towards that. I know this. No matter what I say, it's going to be wrong. So this goes back to like more of how we do planning at our firm. It's like most financial planners going back to like these scenarios and simulations. Most planners, it's like, all right, you're 43 and you want to retire when you're 63 or whatever I said earlier. What they'll do is they'll sit down, they'll ask you a bunch of questions. How much money do you want to spend on utilities when you're 76 and whatever? They're going to run it through of your assumed rate of return for all these things. They're going to have their default inflation rate and so on. They're going to give you a 3-inch thick booklet that says, hey, if you do X, Y, and Z, and if the market does this and inflation does that, here's your probability of being okay when you retire. You're at a 64% probability of success of retirement. We'll see you next year. I think that's massively broken because you're assuming that you know what all of these things are going to do for the next few decades. And I know that the one thing I know for sure is I have no clue what's going to happen. So that goes back like how I'm going to this because you asked like, what do I assume for inflation? I would say higher than most advisors. But how we work with our clients is way more, it sounds like a commercial, I'm sorry. That is way more tactical and small steps in planning. Like we approach it through agility. So when we build financial plans for our clients, they're not a few inches thick. It's 2 pages. It says, here's where you're at right now. Here's what you said is important to you. And here's everything we need to start working on. And then we're going to meet on a very regular cadence to regularly tweak and adjust and update what you have. if we need to make any decisions with your taxes, your investments, your retirement, your businesses, or anything like that, and then, oh, hey, based off of what's happening with your cost of living and your assets, here's where we're at right now as far as your financial freedom. So we basically I remove that massive guesswork completely by bringing in regular small touch points. And of course, you could say, well, Jim, I need a number here. Am I going to be okay in 40 years? And that's why I think, owning Bitcoin in some capacity makes sense, because that removes that issue. Was it Charlie Munger and Warren Buffett, I think in like 21, even mentioned that they think that the US dollar will no longer be the primary global currency. They didn't give an answer of what they thought it would be. They seem relatively sympathetic to China, so I'm assuming that they think it will be some, whatever their currency is in 100 years, or by the end of the century, rather. But I think everyone is starting to recognize that, the money is broken, but the rate at which it reaches final breakdown is unknown, or if it will. Will goods and services be even priced into the dollar? Will it be priced in Bitcoin? Will it be priced in the dollar, but the dollar is pegged to Bitcoin? Like, I have no clue what's going to happen here, but I know you should probably own some Bitcoin. And if we look at how much, then you have to look at what is what's the assumed growth of Bitcoin, and what's the impact of Bitcoin's appreciation. How will that impact other asset prices? Like, if we think that Bitcoin will go up over a long period of time in real returns, not nominally, but in real, then that has to come to the detriment of other assets, be it your money, bonds, stocks, real estate, gold, collectibles, things like that. So if we think that in real terms, the value of your assets will go down in order to drive the value of Bitcoin up, then you have to start considering, if I don't own any Bitcoin and Bitcoin is starting to take a larger and larger piece of that pie, what will actually happen to the real value of my portfolio? And then you need to think about substituting whatever sliver of that with Bitcoin. I would say that's the base case.
And it's super interesting because I get asked the question more and more by friends, which kind of makes me bullish on Bitcoin, but worries me about the financial future of the euro, because more of my normal friends that aren't in Bitcoin asking me now, oh, will the euro go down next year? And it's interesting because they haven't been down the Bitcoin rabbit hole, but they got first down the rabbit hole of like, oh, I think our money is broken. And they're all young. Like, there's all young people that ask me that. And more of them actually get Bitcoin and get hedged now with Bitcoin. And I don't care about that question as much. Obviously the inflation rate is super interesting because it's something that we all like feel and things get more expensive. And it's something that even mainstream media talks about, that inflation is too high, which I think is amazing that mainstream media is now talking that inflation is too high. The numbers they're pulling is completely absurd. Like, I think they're all way too low, but at least they're talking that inflation is too high. That's the main message that should come across. And I always tell my friends, and I always tell the people that ask me a question of like inflation rate. At the end of the day, I have Bitcoin and I have faith in Bitcoin. And if the dollar is inflating with 50% next year, I know that most of it or part of that inflation will be captured by Bitcoin and I will be fine. So yeah, I don't want the dollar to hyperinflate, honestly, because this will make a lot of trouble for normal people. And I don't want trouble. I don't want a civil war or anything like that. I don't know what will happen if one of the chief free nations like Euro, Yen, or dollar is hyperinflating. I just had Parker Lewis on, and he's like, if one of the chief free nations is hyperinflating, it's game over. Like, he's the gradually then suddenly guy. But I know I do everything in my power to be okay with Bitcoin and set myself up hopefully for success. And then it's like, yeah, I still care about the question, but maybe not as deeply as someone that still is in the fiat system.
It's interesting with you. So yeah, news agencies and normal people are starting to talk about inflation. Is inflation too high? That even goes back to, are they actually asking the right question? And the question is not, I would argue, should not be what rate should inflation be at, but rather, should we even have inflation? And if we have it, why does it exist? And just pulling on that thread. So I think people are still trying. It's good to see societally people starting to ask better questions, or at least be curious. But I think it still is somewhat misguided. And until you start asking the right questions, it's going to be hard to come to the right conclusion. And I think you're seeing this. Let's see. So you're seeing this in another area of society. So for instance, like I'm a Christian, and I think a lot of Christians or a lot of people globally are waking up to a lot of issues with like morality and social norms over the last few years. And a lot of that, especially a lot of that has to do with like how boys and men behave. So I feel like there's been this gap of good manliness societally for several decades at this point. And it's been replaced with hyperfeminism, and like domineering of women, and the man's role has been manipulated and looked down upon. And people are starting to ask, like, what happened to strong men? And they're asking questions about what manliness looks like, but they're not asking the right questions. So they're asking questions, recognizing their solution, but they're asking the wrong questions. And if you ask the wrong question and thus lead you to the wrong conclusion, you have people like Andrew Tate who come in and start filling that gap. They feel like, oh, well, something's wrong with manliness. That guy is super machismo, so we're going to bring him in as the answer to manliness. And you're getting the wrong conclusion because you're asking the wrong question. And I feel like Andrew Tate is the manliness, quote unquote, equivalent to a substitute for our problems with our current monetary situation. It's like, oh, well, something's wrong with our money. Inflation's maybe too high. Maybe we should look at a different fiat currency that has a different inflation rate. Maybe a different a different country controlling doing the puppeteering of the fiat behind the curtains. Instead of the US, maybe it should be China who's puppeteering it. Or instead of a country, maybe it's a company. So we bring in the Ethereum Foundation who can do the puppeteering of our essentially fiat. So again, I'm glad to see that questions are being asked. I'm hoping that there's more voices like yours out there that can steer people towards asking the right questions. So people don't have one problem is if people recognize there is a problem and they start asking okay questions and they come to a conclusion, now they feel like they're right. And now they're going to go out and try to make, like other people who understand what they've been indoctrinated into. And they recognize there's a change and this is a substitute for what you've been in. Thus they're trying to indoctrinate people into their new beliefs. So then it brings a lot of confusion. Like, oh, well, yeah, there's something wrong with the system. That's why we have crypto. And you have a lot of people out there who are crypto bros or other asset bros because they feel like they've found the solution. And now they're trying to get people to adopt their solution instead. So it's going to be a race to help people make educated decisions on what's the problem, because you can't understand the solution until you understand the problem. And so it's recognizing people the actual issue, and thus come to the conclusion of the actual solution.
Yeah, and I love the question. Why do we even have inflation? Like, if the topic comes up and just like, oh, like why do you think we have inflation? Unfortunately, the answer I usually war, like oh yeah, because Putin. So I'm like, I don't know how I should even answer, or like what I should ask now. But there's sometimes crazy answers that come like, oh yeah, like. Have you seen the one where there was some famous singer and there was an article of like she's the reason why we have inflation. And I read that article and I was like, that's hilarious. Like that's like, I haven't read a single true sentence in that article. And they blamed, because she's charging for higher ticket prices and other people have to, claim higher salaries. Like it was a whole thing of like, yeah, like let's search for the symptom, and let's say the symptom is the cause.
So they're saying that her ticket prices are so high that it's causing people to, there's enough following that this small subset of people are having to, in order to pay for her high ticket prices, are having to change their entire lifestyle. That leads to this trickle effect of avocados going up in price because people need to have more money to go to her concert. Like,
it was something like that. I have forgot which singer it was. There was some famous singer. Like, I don't want to name the wrong one, but like there's someone and they're like, yeah, she, because of her, we have inflation. Anyways, I think this is, most people understand why this is not wrong. But a lot of people bring up like, it's we because we have been to war. And I'm like, yeah, we always had war. Like, maybe ask yourself the question, like, how do we finance those wars? And maybe then you come closer to like what inflation actually causes. One thing that I wanted to ask you actually before is the thing with clients and advisors, because for me it is like, for me, Bitcoin should always come as much grassroots as possible. And I'm asking myself the question, if financial advisors have the responsibility to like advise people on financial stuff, and then those people, the clients, are advised, and most of the advisors like don't even talk about Bitcoin, or just do it as like, oh, you should not do that, like it's a risky thing. At some point, aren't the clients asking the questions to the advisors like, oh, what's your Bitcoin strategy? And Bitcoin has gone up from like $1,000 to like 10,000 to like 100,000, maybe at $1 million. And people are like, oh, why did you never tell me that at least like 1% of my portfolio shouldn't it be at least like a part of like a risky bet with like 5%? Or like, aren't the clients slowly asking the advisors to include Bitcoin in the strategy?
Yeah, I think you are seeing that some, and there's some advisors who will outright fire clients over that question being asked. Like, all right, if you want to do that, go do it on your own. Or another set of advisors will maybe buy 1% of their portfolio into Bitcoin ETF in order to satiate that demand. And again, that's better than nothing in a sense, but usually the people asking those questions don't really understand what Bitcoin is and why it's gone up a lot. And as you're well aware, if you're buying Bitcoin and you don't understand it, there's a really high chance of you just getting absolutely wrecked. Like if you bought Bitcoin at 69,000 last cycle and you didn't understand what it is, and you wrote it down from 69 down to 30 and it keeps going down, a lot of those people sell. So an issue with, the advisors clients go to advisors, hey, why haven't you ever bought this? It's gone up 10x in the last 5 years. I want to own some. And the advisor argues with them on it. Finally, they give in again to satiate that desire. Otherwise, the people are going to walk. And then it drops from 120 down to whatever from there. They probably have an advisor in their ear sort of subtly saying, I told you so. And the client doesn't know why they own it. They just knew that it went up a lot and they feel like they missed the bus, but now they're second guessing themselves. So that can be dangerous too. Yeah, I do see that. We have a fair amount of people who are coming over to work with us. And a decent amount of that is spurred by frustration from their legacy advisor it's not even the fact that they don't own it. It's the fact that they're less willing to even ask why, if they should or should not, and why they came to that conclusion. And that's really what frustrates me. Like, I'm a huge fan of intellectual integrity and consistency. And if you say that you've applied this criteria to analyzing someone's portfolio and taxes and so on, but you're purposely leaving that criteria out on this one thing, I think that's very deceiving. And that's what's frustrating for most advisors in this field is, dude, I respect the way that you make decisions in so many ways, but this thing is inconsistent. So yeah, we'll see what happens there. I think there is starting to be some frustration when you look around and see, like, all right, my portfolio has gone up by X. This 60-40 portfolio that you sold me was supposed to do this during market pullbacks, the bonds didn't behave in the way that you said they would and should. And the whole reason I own these bonds is not for appreciation, but as a hedge to market volatility. And it's not providing that hedge for several bear markets in a row. What's going on? And I think people are starting to realize this. I think part of that just comes with general financial literacy. There's a lot of people on YouTube and so on who talk about portfolio construction and everything. So people are starting to be able to ask better questions. Like, okay, well, why do we own bonds? Historically, you bought bonds because your broker told you to buy them or whatever. And now people are starting to understand the mechanics somewhat behind it. So they're getting better at asking the right questions. It's a matter of filtering. Now we're getting to the place where it's less of soliciting products from clients and more of applying practical and wise counsel to our clients. So clients can come to us with all kinds of goofy questions that are halfway correct based off of data they've been finding on YouTube, but they still know how to apply it. And I think that's probably one of the problems with non-Bitcoiners who want to own a little bit of Bitcoin in their portfolio is they've seen some videos on Bitcoin. They take it to their advisor and say, hey, this looks really interesting. I'm going to buy it. And, but they don't actually have the tools or the equipment to, again, substantiate why they have that conviction. Because in reality, they don't have a personal conviction. They're just regurgitating a blip they saw on YouTube. So yeah, that's where, again, having like deep conviction has to be founded in deep education. And that's why we all know that if you're going to be if you're really going to be a Bitcoiner, you need to do a lot of work of understanding this thing. Otherwise, maybe you're in it just for number go up, and that could be a good gateway. But eventually, you better take time to learn about this thing.
I do love the watches from Coin Vigilante, but today I have a very special message, not from me, but from the CEO himself, Carlos from Coin Vigilante. Let's hear him.
To all the Robin Seyr podcast community, I'm Carlos Estrada from Coin Vigilante, and we're sponsors of the show, and we're going to give you a very special discount exclusive to you, 10% off your order at coinvigilante.com when you use Robin at checkout. We have really nice watches that you guys can buy right now for 10%. This is a transparency edition, beautiful watch. These watches are worn in over 55 countries and counting. This discount is just for you, exclusive to the Robin Seyr podcast. We have limited editions. We have limited productions. These watches come in very nice packaging, boxing material, and they are collector's item for Bitcoiners only. Enjoy the discount. Thanks for supporting the show and Coin Vigilante.
I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC-free Bitcoin. That's why I use simplemining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. You get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need. The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation.
And most people don't have the deep conviction. And on both sides, like the people that are against Bitcoin and the people that are for Bitcoin, I've came to know that if someone introduces me in a new friend circle of like the Bitcoin guy, and someone's like, oh, like, but Bitcoin is bad because of X, Y, Z, and I just simply ask him, oh, like why is XYZ bad? And then it's like usually like one headline, and then you ask one deeper question there, and they're completely gone. Like they don't even have a clue about what you're saying. It's like if someone, for example, brings up the environment argument, you ask them, oh, like, what is difficulty adjustment? And they never heard difficulty adjustment. So like they clearly never really did any research work. Otherwise, they would have known what the difficulty adjustment in the Bitcoin mining is if they're so concerned about Bitcoin mining.
Yeah, they're just regurgitating the snippet talking points rather than actually thinking. Because the moment you challenge them to think beyond the one point they memorized, it crumbles. So again, if people are willing to actually think for a moment and ask those hard questions and be fine with coming to a conclusion that maybe is different than what they had initially, I think the logical conclusion is I should probably own some Bitcoin.
100%. And it's also, I think, it's a cheat code for Bitcoiners. If you are in a debate style, ask the opposite questions, because most likely he didn't do his homework. I've really, like, it's really rare. There are instances where I came across someone that, like is against Bitcoin that knew really a lot about it, also about the technical aspect of it, usually like software developers, and then they don't know about the economic side of it, and like why does like the Austrian economic side of it, and like why does it make sense from that side. But it is interesting of like ask a few good questions, and they will see themselves. And I think that's probably also a good way to actually orange pill people. Ask questions, not to like, oh, I gotcha, but like ask them actual questions of how they look at things. And maybe, just maybe, there's a process starting in their head of saying like, oh, I've never looked at that way. Oh, I should look deeper into that. Just like maybe you can spark something, because I think debates are useless, because like both have a very, like both go in with a standpoint and both go out a little bit angrier with the same standpoint. Like that's for me usually a debate.
Yeah, generally they're going to be further entrenched. So most time, if you're going to engage in a debate, you're doing so less for the person you're debating and more so for the audience who will be listening to it. Hopefully as you engage people, the questions, as you mentioned, that you ask are it's less a gotcha. And at least when I ask questions, I'm not trying to get somebody. I'm trying to actually be there as a primer. Like if you like, all right, I see this. They haven't turned on the engine of their mind for a long time. Let's go ahead and we're going to prime it for a minute, and I'm going to give it a couple pulls, starting a lawnmower or something like that. Like those are the questions I'm trying to ask, is like, maybe I can get your brain to start running by using this method of forcing you to think. And again, if you can get past their talking points of, let's go back to inflation. If you can get past their talking points of, well, inflation, instead of 2%, it should be 3%. If you just ask another question is, why does inflation exist? What causes inflation? Something like that. Most people have never stopped to think about even that simple question. Why does inflation exist? And even just someone, again, putting that rock in their shoe where they think, well, I've never stopped to consider. Or again, like even the most basic question of what is money? Like I never thought about what is money until I stumbled into Bitcoin. And that's someone who works in money. But most people don't think about those things. So a lot of it really is those first principles. Like, again, going back, like if you're arguing with someone, like, if you're arguing with someone about about morality, again, like if you're, let's say you're atheist and deist, and the question of, well, there's no way I would serve your God because he's evil. Like, well, in your worldview, evil can't exist. Good can't exist. Right and wrong do not exist. So what is your basis for defining evil, in the vacuum of your worldview? And, it's asking that further question to say, well, do you have a backing for that? And, again, I think that we can go there as well with Bitcoin by asking those simple questions, not as gotchas, but truly as, in hopes of forcing them to ask those better questions. Again, not just asking questions, but asking the right ones, and actually asking them genuinely, where you're willing to have your mind changed. Again, everyone thinks they're right. No one walks around thinking they're wrong. Everyone thinks they're right. It's just the people who are willing to say, okay, if I find out I'm wrong, I really want to be right. So the moment I realize I'm wrong, I'm going to change my mind, and then I'll think I'm right again. So hopefully holding convictions, some of them loosely, some of them tightly. Like I have a lot of things that I believe that I hold very loosely because I really don't have much of a basis for believing them. And I'm willing to have my mind changed about those. And the other things I hold tightly. And hopefully, again, most people who believe that, the US dollar or fiat currencies are the best or the only way, don't hold those beliefs very tightly. It's very loose. They've just never been challenged. They never even realized that they hold that belief per se. It was just the default. Of course, the US dollar is money. Why? What is money? They've never even had someone come in and try to shake that belief out of them at all. So if you ask it rightly, I found that orange pilling people is actually not that tough, because you're trying to shake out a belief that they hold that they've never, it was the default, and it wasn't something that they didn't really have a strong conviction in. Again, if you're asking it insincerely and as a gotcha, then it will end up being more of a debate style where, as you mentioned a minute ago, typically debates will just further entrench someone to their own beliefs because it's a survival mechanism. So trying to engage in those conversations in good faith is usually going to be the better way to go, even for the other party.
It's a good one. I found the article. It was actually Beyonce.
Okay, that does make sense. So Beyonce is the source of inflation. I could see that. It's either Beyonce or it's money printing. It's a toss up. Which one is the cause actually?
Yeah, they're saying basically that because she started her world tour in Sweden, and there's like hotels and restaurants such high in demand that the inflation rate in Sweden went up for that month. And it maybe is a factor. Like maybe Beyonce is just a big factor. But that's just crazy. It's a crazy headline for me to even read out loud.
Like, is that proposing that trickles globally to like actual inflationary issues? Like, obviously, I mean, if you have, I don't know, the cost of a resort during good months at a beach is going to be higher than hurricane season at the beach. Is that the source of global inflation, that more people want to go to the beach during non-hurricane months? No, it's just supply and demand playing itself out, not a total seismic shift in cost of all goods. Like, that has to come down to the numerator and denominator, not simply supply and demand.
I just it's interesting. I just read the article a little bit. They are backpedaling a lot from the headline. when you read the article, they're like, yeah, she probably added 0.2% to the rise of 9.7%, and 0.3% is also added by the hotels themselves. But it's just funny that people would even write that headline. It's like, yeah, she and it's not like, I can understand like if she's in in one area, like if there's like a smaller city and there's like a big star coming, or like there's like the Olympia happening, or like the song contest is happening in a city, like if there's some major event happening in a city, yes, this can definitely rise inflation for that very specific period. But whole of Sweden, even adding like something like 0.2% of the inflation, like that, then in itself, it's already like very astonishing for me.
Yeah, it's. I think everyone's looking for an scapegoat.
Absolutely, yeah. I've heard because you brought that up with learning and wrong, and like I've came to know that, and like I'm more and more of the belief that learning is kind of discovering that you're wrong on a regular basis. It's that understanding that like, okay, my assumptions were wrong, or there's something new. And especially as I mean, I'm very young with 27, but like, especially as I'm getting a little bit older, I noticed that I have more and more assumptions about life, which is actually kind of hard, because to learn something new, it's really great if you don't have assumptions, because learning that you're wrong is a hard thing to do. And so I have more and more empathy, and honestly, with the people that are really against Bitcoin, and that haven't looked down, haven't looked deeper, because I've seen more and more that the longer you're gone in life, the more assumptions you make about life and about all of things. And because you're not that and you're doing good in life, you think you are great and you're right all the time. Like learning is the constant discovery that you're wrong on a regular basis.
Yeah, that's true. Truth itself can be offensive enough, because if you're wrong and you encounter truth, then you're directly being told that, hey, you are wrong and you need to change your mind. And I don't think that we need to add our own additional jabs in there to make it more offensive. Maybe slightly occasionally to wake someone up. There are people, again, who truth itself will not cause them to recognize the wrong. So that's where maybe using some additional harsh tactics can play in. But again, I think most people don't even know they're wrong about something. They don't even know they don't know they have a belief. Like most people don't think they even hold a belief of what money is. It's just a programmed in, like, what do you mean? What is money? So again, if we approach that conversation, I don't know, with a good heart, wanting to actually educate them and help them out versus prove them wrong, most people, I think, will be willing to hear you out, because you're not necessarily offending something deep inside of them. It's the other people who already have these deep convictions that will be more offended, because you are stepping on toes now. And that's where you have to tread lightly. Like, how is that person going to react to just being presented with information versus, maybe not attacking them, but coming at them more directly, trying to get them to listen, or softer approach, relationally. There's people in my life that, it's been, again, I had lunch with an advisor in town recently. We've talked several times about Bitcoin, and it's more this relationship that's allowing a foot in the door to have these trusted conversations. It's not the first time or the third time, it's over time. So yeah, understanding how people will take information, but also recognizing, again, that truth itself can be offensive enough, and maybe check your attitude before you consider adding additional offense on top of truth itself, for someone to hear they're wrong, plus for you to rub it in, may just further entrench themselves.
I love that. Truth itself can be offensive enough. Be kind about the truth. That's really cool. You also said in the beginning that like the initial reaction to Bitcoin is no longer crazy from the clients. Like they like have like more normal reactions to it. And you said, I think this was before we started recording, that you see that the convictions around Bitcoin, around your clients, is continue to grow. How do you see the Bitcoin conception from the clients that actually already
get Bitcoin and they see it growing over time and they get deeper into the weeds of it?
Well, August is a really busy month for us. So we do like we meet with all of our clients proactively every February and August. So February and August are absolute chaos. So August meetings was a lot of people talking through like what's going on with your portfolio and life and all of these factors. And then part of that is going to be talking about Bitcoin and, the question of, do you think the halving cycle is going to persist? What's going to happen with interest rates and the macroeconomic environment, and if or how will that impact Bitcoin? And it's been interesting to see people that 6 months, 2 years, whatever ago did not know anything about Bitcoin, they didn't have an opinion on it. Or if it was an opinion, it was based off of like 2015 FUD, who are now saying like, well, I want to make sure that my Bitcoin is, I want to keep holding my Bitcoin, whether or not we have a 4-year halving cycle, because thematically nothing has changed. And when people bring those things up, it's like, wow, okay, you understand it. It went from I want to own this asset because I think it's going to go up a lot in the short term, to recognizing, again, thematically, there is something broken. And I believe Bitcoin is a solution, and I don't want to let go of that solution because the issues still exist. So that's been amazing to witness. Just having clients, I've had clients bring up, well, Jim, I guess as I think about it further, if when I look at Bitcoin, if it makes logical sense, I guess something like the Federal Reserve doesn't make sense. And someone coming to that conclusion without me pointing them to that is fun to watch. Again, recognizing that, well, goodness, if I've recognized these things, these attributes about Bitcoin, the trickle effect on other assets is X, Y, and Z. People starting to connect those dots on their own is pretty cool. So yeah, I don't know, if you can help people think through Bitcoin, again, asking the right questions and presenting it on a first principles basis, and you encourage them to actually think on their own regularly, then these other peripheral points should start lining up. Again, so I would generally speak, I would argue against trying to orange pill someone just based off of number go up. Or if you take that approach, that better only be the gateway drug to ultimately help them understand it. Again, otherwise they'll never come to these other conclusions. If the moment the number stops going up temporarily, they're going to feel burned and they're going to go to the other thing that the number goes up, or number goes up more in a short season. And that's where, you have people like, oh, I was a Bitcoiner, but now I'm into this other crypto because it's going up more. They never understood Bitcoin. They were never a Bitcoiner. They just happened to own some Bitcoin.
I love that. They were never a Bitcoiner, but they just happened to be have some Bitcoin. One more question I have, kind of from the bonds and the TradFi that we talked about before. How do you actually think those bonds and TradFi products will develop in a Bitcoin world? I'm asking mostly because when I look at my personal financial situation, it's like, yeah, I have Bitcoin, I own my own company, and maybe down the line I want to own my own home, and that's it. I'm like the bonds are so uninteresting for me that I don't even look into them. Stocks might be something down the road if Bitcoin is doing a little bit less. I come from the stock world. I picked stock before. I really enjoy it. It's like a game for me of what stocks is kind of doing good in the next 5 to 10 years, because I'm anyways researching all the time where technology goes. So it's kind of a fun game for me to see, I see where the technology is going. Let's bet on the best horse that can have something in that technology frame, and it's a lot of fun for me. It's kind of like a speculation and a fun part of having 10-20% of the portfolio there, which I will maybe do once Bitcoin matures a little bit more. But bonds, it's like who is buying them?
Yeah, that's when you shift the denominator to being something besides fiat, and you move that over to Bitcoin, or you start asking questions differently. from alternative investment assets. If I don't own Bitcoin, what do I own? And what is the premise behind why I own it? If it's, Jim, let's say Rob and I have $100 today and I need that $100 tomorrow. And I live here in the US. Maybe some Bitcoin maxis will get mad at me for saying this, but if I let's say that $100 today, if it's $99 tomorrow, I will be devastated because I can't buy or do whatever I needed for that $100. I would be foolish to put that into Bitcoin because tomorrow maybe it's worth 99, maybe it's worth 105. I don't know, but it's not worth that risk. If I need it in 20 years, it would be foolish to park that money under my mattress in dollars. So when you think about portfolio construction and you reframe what is your denominator, hopefully that will force you to better consider each intended use of each dollar, where it goes: Bitcoin, bonds, stocks, real estate, cash, whatever. But you better have a good reason. And that also goes into spending. Like if we think that in a Bitcoin standard that most things would actually be deflationary, hopefully that will cause people to give pause before they just blow money. If you have a nihilistic view on the world and a nihilistic view of your financial future, you're going to be more prone to presently gamble or just blow money, because why not? You might as well live it up today because it's tomorrow's out the door anyways. Versus, if you think that things will only get better, you're probably going to be more prone to saving your money and treading more lightly before you make a large purchase. And I think that can have an adverse effect to an extent, because maybe that can lead to greed or maybe missing out on things that are important to you today. If you get confused and think that your end goal is ultimately to have as much Bitcoin as possible, you've lost the plot there as well. But hopefully you'll reach a good equilibrium of people not just having this nihilistic view of their money, thus they just blow it on junk. But then also saying, well, do I take my family on this vacation today to build memories while my kids are young? Or do I wait 20 years and I can do 25 of those vacations later on? Like, that's a valid question. You better think really well and deeply about why is that important to you? And there should be certain things like, yeah, I'm going to take this trip with my kids now because this is an opportunity. And yeah, maybe I'll have less Bitcoin because of it. And I could have done 20 more trips later on, but I can't replace these memories. And hopefully people will start reframing, aligning their values with their money. That's ultimately what I think is really interesting here with money. Ultimately, is money is a means of communicating. It communicates what you value personally. Like, you value your life, so you spend money on food and shelter. And so you communicate that whenever you go spend time with friends, you're communicating relationships are important to you, through your time and your money. So money is a means of communicating your personal values. And also it's a means of communicating, again, economically to all the participants that a cow is worth X amount of dollars or monetary units. So hopefully as Bitcoin takes a larger role in the monetary system, we get a cleaner means of communicating value. Right now, there's a lot of value distortion because the communication lines are crossed in a lot of places. Inflation leads to a lot of white noise on the lines with that communication. So if we have a better form of money, hopefully communication is clarified and people are able to better think through and articulate really what they value.
How do you see it from two angles? Like, there's the non-Bitcoiners that slowly come to Bitcoin, and then there's the Bitcoiner that slowly comes to like personal finance and thinking about things other than just hodl DCA and never sell your Bitcoin. From the side of the Bitcoiner, what are the main things that you think Bitcoiners can or should improve on a personal finance standpoint?
I mean, I guess there's two sides. One would be just the technical side of things. Over the last 5-6 years, I've heard a lot of Bitcoiners say like, "Oh, Bitcoin is my financial plan," and that's pretty much just like saying that U.S. large cap stocks, those are my financial plan, and that what you're saying does not make sense. So helping people actually understand what all areas of their financial life can be bettered through actual good technical planning side of things is important, and not having just dismissive quips and maybe overemphasizing the value. Again, I highly value Bitcoin. I'm like you. My wife and I sold our house a few years ago so we could just buy more Bitcoin. Like I own business and Bitcoin, and that's about it. And so I'm not saying I don't like Bitcoin. I'm saying Bitcoin is not a financial plan. So there's that piece. And then again, I think Bitcoiners tend to do this, at least the ones that I know. And I have a lot of like personal friends who are very deep in the Bitcoin space who do think this way. So I'd like to think this is percentage wise more Bitcoiners lean this way than non-Bitcoiners. But again, always just taking inventory about really what's important to you and what's important to your family, and ensuring that your money and your time is actually reflecting that. Money's the number one cause of divorce every year. And I don't think people don't usually do that on purpose. But again, money communicates. And if I'm using my money on, if I tell my wife that spending time with her and our kids is really important, but then I go buy a really fancy car that forces me to work overtime every weekend so I can afford to make the payments, I'm telling my family that car is more important than time with them. And again, so thinking through how you're using your money, is that reflecting what you are telling people you value? And hopefully we can have congruency with your time, your money, with what you actually value in life. And that has to start with taking inventory of that, asking those questions. What is important to me? And why is that important to me? And are we showing consistency with my time and my resources with what I'm saying?
I love that. And I think many of those topics we also covered a little bit last time. And I will link it to the description, because I think last time we also covered that topic very well, of like spending Bitcoin and having like a good balance between dying completely broke and dying with the most amount of Bitcoin possible. So like somewhere in the middle is probably the truth. And so I will leave it at that for now. I asked each and every one of my guests, each one of my returning guests, one question, and the question is, what have you learned outside of Bitcoin since your last appearance?
A lot. I'm always trying to learn. I've been trying to get better. I'm regularly trying to become a better dad. I'd say that's probably the biggest thing I'm working on lately and trying to learn about. And I was actually talking to some friends last night that ultimately you don't know the fruit of your parenting until your kids are pretty old. Like I would say probably in their mid 30s before you really see how good of a parent you were. But that's what I'm trying to learn how to be a better dad, and trying to regularly take inventory of how am I doing. So that's like one of the most important roles I'll ever play, and I'm very aware of that. And I regularly remind myself this isn't the practice run. These kids that I have at home, they are not this isn't the test, and I'll get another set of kids to really go through it with. It's tough. I think when you're a kid, you think that they're your parents. They've done it before. But in reality, I have no idea what I'm doing. I'm doing my best, but it is very, it's weighty to think the impact of my life on my kids between what they catch and what I teach. So making sure that I'm doing that well. So yeah, I'm trying to learn how to be a better dad, better husband. That's how I spend a lot of my time.
It's probably the best thing you can do. Like without, like, I'm not a dad. I'm probably too young to say that, but from all the conversations I had with people, this is probably the number one thing someone can do. Be a great parent. Like that. It's a great way to spend time, I think. We have entertained in our podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And he asked a really suiting question, actually. What's the best thing you bought with Bitcoin?
Man, I regularly I buy wine from a buddy of mine. His name's Ben Justman. He makes fantastic wine in Colorado, and so I generally will buy his wine. So I would say Ben Justman's Peony Lane wine is my favorite thing that I buy with Bitcoin.
That's awesome. Yeah, he was already 2 times on the show too. So like, it's great. I have never tasted his wine. Like I have to do that. I think, I don't know if he ships to Europe. But if he does, I think I have to order some.
You know, I'll look at the rules. If I can fly with a bottle of wine internationally, and if I remember, I'll bring a bottle to Amsterdam for you.
Gosh, that would be too sweet, man.
I love Ben. He's one of my favorites.
Perfect. Yeah. Thank you so much, Tim, for being on. Before I let you go, where can people find you and all the things that you're doing?
Yeah. Gosh, our website for our financial planning company. It's the name of our company is called Intentional Living Financial Planning. So, our website is intentionallivingfp, is in financialplanning.com. On there, you can find my calendar. Even if you just have a one-off question, it's like, if I could just get this question answered, that's all I would need. Okay, perfect. Throw a time on there. More than happy to roll up our sleeves and do our best to help you point in the right direction. You can find me on Twitter or X. It's my handle is Jim Crider. TX is in Texas. Yeah, happy to talk and help any way I can.
Awesome. Then yeah, thank you so much for being on, Jim. And also thank you so much for everyone that is watching and listening, for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.